Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing a little bit of technical analysis on Bitcoin and the cryptocurrency markets because there's a very interesting pattern on the Bitcoin chart that I wanted to bring to your attention. This pattern has repeated itself almost all the way through 2018, and it looks like it's actually going to be broken here in this little, what looks like to be a failed rally that we're currently experiencing. I'm going to be showing you this pattern in today's video. I'm going to be talking about the significance of it, and I'm also going to be talking about what I believe the prediction it is making is, and what I think it means for the future of the Bitcoin market coming over the next couple of weeks and into the next couple of months, guys. I do believe this is a very powerful pattern, and we're going to be getting into it in just a second. But before we get into today's video, guys, as always, if you enjoyed today's video, definitely consider dropping a like, hitting that subscribe button, and smashing the notification bell, guys. We do cryptocurrency videos every single day, and I wouldn't want you to miss any of them. But also, before we get into it, I have to go ahead and talk about also that yesterday, the Cryptocurrency Technical Analysis Academy did launch. As we can see, if we come over to the actual sales page, you can see it has launched. We're going for $99, and I do think it's a very fair price. Everybody who's currently in it, we've had dozens of people sign up already. A lot of people have already joined, and a lot of people, I haven't had any negative feedback, actually. Everybody seems to be extremely happy with it. If you come down here, you'll see what we're actually offering is 17 videos, and when you buy the course, you're also not only going to be getting access to these 17 videos, you'll also be getting access to every single other video I ever upload to the course in the future, of which there will be many. And also, guys, there's really no risk in doing it because we have a very fair refund policy. If you watch less than 30% of the course, and in the first 14 days, I'll give you a full refund. So come in here, you can watch 4 or 5 of my videos and get all your money back if you want to scam me, but go ahead and do that. If you're that kind of person, I see how it is. But otherwise, I'm sure that you won't have to use that. Anyway, guys, I had to go ahead and mention that because the course has launched. I want to make sure you guys know about it, and everybody who's currently in it seems to be very, very happy with it. But of course, guys, I had to go ahead and mention that. One last thing that we want to talk about before we get into the video is where the actual idea for this video came from. Because I have been following this pattern for quite some time. I have noticed this pattern that I'm going to show you, but the actual idea for doing this video, and actually I should say the reminder for doing this video, because I had planned on doing this video and I simply forgot, actually came from a video Alessio Rastani did over here just yesterday. He uploaded a video called "A Weird Pattern on Bitcoin Repeats Itself Again," and I have a still frame right here explaining what we're going to be talking about today. I highly encourage you to go watch this video after you're done watching this video. I'm going to be talking about a lot of stuff in this video that he didn't mention, but this video was inspired by his video. Like I said, I had been planning on doing this video, but I completely forgot about it, and he was the one that reminded me. So definitely a shout out to Alessio Rastani, great channel that I personally watch and I personally recommend. Anyway, now that we're out of all of the, now that we're through all of the introduction stuff, let's go ahead and get into the video. Bitcoin is currently trading below $6,600, which is definitely not a good thing. We're going to be discussing that in a second, but let's go ahead on over to CoinMarketCap. I'm going to have to do the little blackout thing again, guys. I apologize for that. My new mouse is in the mail, and that will be fixed very soon. So let's go ahead and come over to CoinMarketCap now. And as we can see, it's not exactly a very good day for Bitcoin. Bitcoin is hovering around almost exactly $6,600. It's down about 2% over the last 24 hours. And the altcoin market isn't really faring any better. We see about 5 or 6 gainers, period, and 2 of those, of course, seem to be the stable coins. The 2 stable coins always seem to be in the minority. If you guys have been watching the videos for a couple of months, you'll probably notice that whenever there's only 5 or 10 altcoins, either up or down, it always seems to be that the stable coins are there. I think that has to do with people trading over the stable coins, so when they're actually trading from their altcoin into the stable coin, it's boosting the stable coin or crashing the stable coin, which is probably why they're a bit of a hedge for the rest of the market, even though they're supposed to be kept at a consistent value of $1 a piece. Anyway, like I said, the altcoin market isn't doing particularly well. We have a lot of double-digit losers. We have, 7 double-digit losers today, with Electroneum down about 22.36%. I'm very, very sorry for you guys if you're in Electroneum, because that's not exactly a great day for Electroneum. But anyway, Electroneum has had a very good week. As you can see here on the 7-day price graphs, it had a lot of good movement, so we were expecting some kind of retracement on it. Anyway, Ethereum is doing pretty well, actually. It's hovering up here around $233, far better than what it was looking like 2 weeks ago when it was down around $170 when it pulled all the way back down there. If you guys managed to buy down there, I'm sure you're very happy with yourself. Ethereum's down by about 5% over the last 24 hours, and XRP is actually not doing very well. If we have time at the end of the video, there's a pattern I want to show you on XRP where XRP actually broke bearish out of, but currently XRP is down about 10%, and that's actually kind of what I was expecting from the pattern. Like I said, I'll show you that at the end of the video if we have time. But anyway, I believe that's just about everything we wanted to cover on CoinMarketCap. Bitcoin dominance has been going down a little bit, partially because of that little XRP rally that we saw a couple days ago. If you're interested in my take on that, you can watch that video on the top right. But XRP did have a massive rally. Ethereum has been doing pretty well over the last couple of days, and Bitcoin hasn't been doing as well, so dominance has been down a little bit. But also, not only has dominance been down a little bit, market cap is also down a little bit, but that's just because we see so much red today, guys. Nothing to worry about there because we are back over a fifth of $1 trillion, over $200 trillion. Let me do the okay, there we go. Awesome. I was worried about clicking that tab, closing the tab, and having to reopen it again, guys. I do apologize about the mouse thing. I actually, surprisingly enough, don't have a spare mouse, so I'm having to order the same mouse that I already have. I love this mouse. Anyway, without much further ado, let's go ahead and get into this pattern that I was talking about. Let me get my actual plan page up. Actually, no, I don't need that. We're all right. Let's go ahead and get into this pattern. What we're going to be using in today's video is the Fibonacci retracement levels. I don't talk about Fibonacci too much in the videos. There is a course video on it where I talk extensively about the Fibonacci levels. If you're interested, I already talked about the course today, but if you're interested, that's where I talk about it in more detail. But I'll go ahead and give a quick rundown on the Fibonacci levels. Essentially, what we have over here is our tool. It'll look like Pitchfork. This is what your sidebar will look like by default. Click and hold that, or just click this arrow, grab Fib retracement, and then you drag it from a more distant high to a more recent low, and then we see the Fibonacci levels. And what we see if we use our Fibonacci retracement levels on all of these little rallies that we've seen here in 2018 is very, very interesting, because we pull our Fibonacci levels down from this high over here where Bitcoin ran to around $11,700 to the low down here around $6,500. What we see is that Bitcoin came up here and got resistance and rejected right around the 61.8% retracement level, which is typically what you see happen, because the 61.8% retracement level and the 38.2% retracement level are two of the most important Fibonacci levels. 0.5% isn't even technically a Fibonacci level. You get it from using 1 and 2 to get the number instead of the actual Fibonacci level, so it's kind of a cheat of a Fibonacci level. I can't get in today what I mean by that. You guys can Google how Fibonacci levels are calculated. It's based on the Fibonacci sequence. These numbers do show up a lot in nature. For example, 0.618 is the inverse of phi, and 1.618 is the actual phi. Very important in geometry and calculus. But nevertheless, what we see with these levels is that typically when a market is bouncing and recovering, we'll see it come up to one of these levels and get resistance. And that's exactly what we saw here in the April and early May rally, where Bitcoin topped out around here, up here around $10,000, just a couple of $100 above the 61.8% retracement level. So that means that we did get resistance on that zone, and that's kind of an interesting trend in and of itself. It's not really all that big of a deal, because typically that's what you see a market do. A lot of times when you're using the Fibonacci retracement levels, you'll see that markets do retrace to that level, so that's not very peculiar. That's not really all that interesting. What is interesting is how many times it actually did it, because if we pull Bitcoin Fibonacci retracement levels back from here, we see that this July rally did the exact same thing. We came up to 61.8% retracement level, and we got resistance almost exactly perfectly on it. And let me go ahead and give you an example of something that you should be doing when you're using Fibonacci retracement levels that I wasn't doing right there. Use your magnet mode right here, and then you can snap Fibonacci retracement level to the actual wick candlestick, so they're perfect. So if we do something like that, and then we drag it over, then that'll be just about perfect right there. So as you can see, we came up here and we got resistance at the 61.8% retracement level again, but that's not all. It happened twice. Okay, great. It happened twice. That's not really much of a pattern yet now, is it? But the thing is, it happened again. After Bitcoin pulled back here from around $8,500 back all the way down here to $5,860, we saw Bitcoin do the exact same thing again. We came up here and we got resistance within a couple of percentage points of the 61.8% retracement level. I don't know how well you can see that. Now you can see it. Right there, that level right there. Bitcoin came back up to that zone again. 3 times in 2018. Up to this point, has Bitcoin done this? And $7,500 is, of course, also a big even. And the market came up to around $7,400. There were a lot of other things that caused Bitcoin to get resistance here. But the fact that it got resistance at this level, again, is a very, very important and telling trend. And an interesting thing happened here. Now, we've just talked about how this has happened 3 times in Bitcoin's history here in 2018. 3 notable times anyway. It's happened 3 times. That's a trend. Typically, when you have a trend, you say, okay, well, we have a trend. It's probably going to repeat itself, right? Not necessarily, because if we look at this retracement right here, we see Bitcoin hasn't actually gotten up to the 61.8% retracement level this time. It only went to the 50% retracement level. Now, if you use this wick, you could say we got about halfway to it. You could say we got resistance on the 61.8% retracement level this time. I don't subscribe to that. What it looks like to me is that Bitcoin got resistance here on the 0.5% retracement level, half of the way back up to $7,400, which is a trend break. That is the break of a trend. That is the break of a pattern. And typically when you see the break of a pattern like that, it's typically significant, guys. This is something I talk about in the course a lot, is that when you see the break of some kind of trend, that typically is an early warning sign of some major market movement. And I really am going to be getting into now why I'm not exactly happy with what I think that trend may be predicting. So we've seen this happen 3 times in 2018, right? Every time Bitcoin retraces, it goes back up to the 61.8% retracement level. Now it hasn't, and that is a very interesting thing, because look at where Bitcoin got resistance. If we look at where Bitcoin got resistance here when it was topping out around $6,800, where it actually got resistance was on the 100 SMA. The 100 daily SMA right here, this gray line, Bitcoin got resistance on the 100 daily SMA. Not a very good thing considering the last 3 rallies where Bitcoin went up to the 61.8% retracement level all got above the 100 SMA. Not including this one over here because this was kind of the first one. This is kind of the black sheep of the herd. But these last 3 rallies where we saw Bitcoin go back up to the 61.8% retracement level, all three of them got above the 100 daily SMA. Not this time, though. And that is concerning for another reason, because $6,600 right here that you see we broke recently was a very important level of resistance. It was a very important level of resistance, and typically when you break a very important level of resistance, you see a massive green candlestick. Don't get me wrong, this is a pretty big green candlestick. How tall is that? Maybe like 5%? About 5% is the actual height of that green candlestick, but it's nothing to write home about. On the same day that this happened, XRP ran 110%. And something was striking me as very strange when XRP did that, and that's the fact that hardly any of that valuation went into Bitcoin. XRP more than doubled its valuation. It brought like $16 billion of market capitalization back into the market in one day, but Bitcoin only ran 5%. Now, that's a very strange pattern, and when we look at everything that's just gone on. Bitcoin didn't manage to get above the 100 daily SMA. Bitcoin didn't go back up to the 61.8% retracement level. It didn't get a major breakout above $6,600 like we thought, and that tells me a couple of different things. A couple of different scenarios may be playing out here. One is that most of the hype and most of the excitement and exuberance for Bitcoin really is gone, and we don't have the hype to even run a couple hundred extra dollars to continue the pattern that we're currently in, and that kind of shows itself that we're currently coming below $6,600. We're currently, as I'm recording this, trying to get support here. Whether or not we're actually going to get support here is anybody's guess, I should say. But the fact of the matter is, we didn't get the rally that we were looking for. Is the rally over? There's a couple of different ways you can look into this, guys. Like I said, one scenario here is that we do bounce here around $6,600, and then we come up and complete the pattern by coming up here and getting resistance on this downtrend like we have in all of these rallies as well. We came up to this downtrend. We haven't done that yet. Another scenario, like I said, is that something like that happens. We bounce here at $6,600, and we come up here to around $6,900 and get resistance on this downtrend while also confirming the 61.8% retracement level pattern that we've seen here throughout 2018. If that doesn't happen, though, that's the break of a trend, and that is not a good thing, because if it's basically what we're seeing here is the break of a bearish trend when it's not very difficult for the bulls to actually continue the bullish trend. Okay, that's not a good thing. And like I say in the course a lot, and like I say on the YouTube channel a lot, the break of a trend is typically a very, very bad thing. So what does this mean for the market? Well, what we've seen for Bitcoin, what we've seen Bitcoin doing here in the majority of 2018 is essentially what I'm going to be dubbing a Fibonacci consolidation pattern. I've never seen anyone use that term. I am completely making up that term, so feel free to copy strike me, PewDiePie. No, feel free to steal that from me. But the point is, I'm going to be calling the Fibonacci consolidation pattern, and that's what it seems like to me, because every time Bitcoin goes on a little run here and has a little recovery, it consolidates a little bit. We lose a lot of that volatility, and that's why I've been talking about volatility dropping off so much in 2018. It has a lot to do with this Fibonacci retracement, this Fibonacci consolidation pattern where Bitcoin pulls back and then only goes back up to the 61.8% retracement level. And that's one of the reasons Bitcoin has been just consolidating and squeezing in here. And what you see when a market breaks out of a consolidation pattern is typically you see a lot of price action. I'll show you on XRP what I'm talking about here. XRP was in a consolidation pattern, really it was in a pennant yesterday. We saw it was in this kind of consolidation pattern right here, and it broke bearish out of it. That's where that negative 10% came from. That's the pattern I wanted to show you. Typically when you're in a consolidation pattern, not really all that great of an example right here, but typically when you're in this kind of consolidation pattern, you typically see a lot of price action coming when the consolidation pattern breaks, when you see the trend break, when you break either bullish or bearish. And right now, if Bitcoin doesn't manage to go back up to 61.8%, then that would, in my opinion anyway, be a break of this Fibonacci consolidation pattern, as I'm calling it, which also happens to line up with an actual classical consolidation pattern where we have a downtrend here and an uptrend here. So tell me in the comment section down below what you think of what I'm talking about here. Is this as significant for Bitcoin as I think it is? What I think is most likely to happen here is that it's not as big of a deal as I'm exactly saying it is, and what I think is probably going to happen is that Bitcoin is just going to disregard the pattern, and we're probably going to come back down here and test this uptrend, and we're probably going to end up breaking out, well, we're definitely going to be breaking out of this actual trend line consolidation pattern sometime in the future. But I nevertheless do believe that this is a very powerful pattern, and it is interesting to see it being broken. opinion. Like I said, tell me in the comment section down below what your thoughts on this matter is. I always love reading your comments. And like I said, guys, if you haven't joined the Cryptocurrency Technical Analysis Academy, which I'm going to be initializing to CT2A for simplicity because that is a bit of a mouthful, then go ahead and head over on and join. Like I said, card payments are fixed. If you were trying to buy the course last night and you weren't able to because you were using a credit or debit card, that was a back-end issue on my end, and it has now been resolved. So go ahead and give that another try if you want to go ahead and get in. But anyway, guys, that's going to do it for this video. I do want to thank each and every single one of you for watching as always, and I will see you guys in the next video. Peace.